You want to drive a car? Debt. You want to operate your daily expenses? Debt. You want to own a home? Debt. There are more people 18 to 29 living in their parents' house because they're depressed and they're jobless and they're in debt than there was during the Great Depression. You see, government debt to me is a form of time travel. You're literally traveling into the future and spending my resources and my kids' resources to go to war, to pass your stupid bill, to waste and spend money and grow debt.
With the federal government now supporting stablecoin and digital currency and certain forms of digital currency, including Bitcoin, for the first time, you're talking to someone who's been negative to neutral, now neutral to positive, that now institutional and federal support has been passed. So what does that mean? It means that Bitcoin now effectively is a medium of exchange. The storehold of wealth, we'll come back to that, but it's a medium of exchange now. So I think the careful thing to consider here is, or things to consider, is this euphoria with the price of Bitcoin, and where it started, when people had it for $500 and now it's trading at 180,000 Australian today, approximately, is that it should be looked at as a form of an alternative form of currency and an alternative form of bartering, and not to get hooked up on, if I spend $180,000 and I buy a coin, will it go to $1 million? It's that $180,000 now should be looked upon as another form of currency, opposed to the US dollar, the euro. It just so happens that there's more likelihood that the value of that coin now will increase, given just the demand and the limited number of supply. So I think that needs to be kept into perspective. I think they've always been cautious of not letting people sort of run away with Bitcoin and throw the house at it. But I think now it's safe to say, or safer to say, that Bitcoin, now gold, will actually support the US dollar in its strength, and that where it will be for the younger generation, because it seems that that's pretty hopeless for them, for most of them, I think, Western world. And I say that because, for a number of reasons, it's just too hard, that the deck is stacked against them. But Bitcoin seems to be a safer harbour than what it was 5 years ago. And there's more chance of them making money out of Bitcoin than what there is making money out of a house or out of an investment, because the accessibility through derivatives or other synthetic forms of Bitcoin, they can get in. They can spend 5 grand, 10 grand, 25,000, 100,000, or buy a coin, buy 10 coins. So that has the ability to be able to do that. Now, if the alternative was the old theory, go to university, as you've said, you're in the red, you're in debt. You buy a car, you want a credit card, a house, everything's debt, debt, debt. So there is a chance now for the younger generation to become more financially independent, and Bitcoin and other investments are a great start. And so, what the difficulty you've got in this segment is that you're not going to get a lot of Western world advice from planning groups and accountancy groups to prescribe it, because it's, in certain nations it's not regulated, and nor can it be insured from an advice point of view, from a PI perspective. But the answer to your question, you're going to see now there is hope for the younger generation to get into an investment that actually will appreciate, and it seems that has undoubtedly stayed well ahead of inflation. And that's the key thing going forward, is that you need to be, and right now, is that on returns, you need to be getting 10% of your money. And most people who don't realise that, so banks aren't achieving that, some direct securities aren't achieving that. You need to be getting 10% because inflation figures that we've been thrown in front of are nowhere near. Inflation, the cost of living, I think inflation, Western world, particularly in Australia, is more closer to 7 than what they declare at the Federal Reserve. And the consumer price index, and I know it is, and I know about 50 items that have increased, in some cases more than 7. So that's rubbish they're feeding us that. So I think for the younger generation is that it's a great, and there seems to be a lot of momentum going into Bitcoin and Ethereum. The only caveat is, of course, is that that's not to say that going into it, it's going to slowly appreciate. That's not to say that it's going to go and be worth $20 million one day, a Bitcoin. That's not to say that it can't be hacked. That's also not to say that you should buy it, depending on your understanding of that. So it just needs to be kept into perspective. But Bitcoin now seems to be a pathway for younger people to get ahead, because there's not much else out there that will be a medium of exchange and be able to appreciate it looks for the next 5 to 10 years. A lot of high net worth, they're asking the same question. At the same time, you've got to be very careful and say, okay, what's the potential downside here? And yes, it looks pretty dark, pretty glim. Massive debt, historical debt, federal debt, personal household debt. Now we've got assets that actually aren't appreciating other than other elements on the stock market. There are companies that are appreciating on the stock market but trading at over abnormal valuations. So we've talked about 2 things to remember here. Is it what's gone down in the last 2 years or 12 months, any commodity that you use, and fuel might be, but that's probably the only thing from time to time that's driven from oil. But day-to-day living, I can't think of anything's gone down. Hold that thought. At the same time, there's not much that's gone up. Housing hasn't improved in valuations in the last, say, 2 or 3 years. The only thing that's gone up is the appreciation, is the fixed interest and bonds and treasury. I mean, day-to-day, the 9-day swap rates, but that's still nowhere near the inflationary figure. And now people say, well, the stock market's gone up. Well, if you pump up the tyres, and you're going to get an inflated valuation. So when you normalise the stock market, and what this fellow's saying is if you normalise the stock market and you bring down where the lagging property portfolio is at, and you then drop to measure how Bitcoin and gold sit, well, gold and silver and digital currency has obliterated equity markets and property prices in the last 10 years. So that's where he's going with that, and it is fairly dark. That's not to say that you go and sell your real estate, but it's chess, not checkers. And so that's, and I think what you're going to see now is that from what I understand is there'll be other forms of digital currency. Bitcoin won't be the only one. I mean, what's preventing another coin from coming out on the market and also having a limited number of production? What is the threat of that? I mean, that might be a good thing.
But it could also be a horse race.
What could be, but if the government issued a stable coin now or a separate coin, another form of digital currency that had limitations of 100 million, not 21,000 or 21 million, and I think that's Could that eventuate? I think that's more than likely. Other forms of digital I mean, you'd be pretty ignorant to think that there's going to be just Bitcoin being the only player in the market, and Ethereum. Well, Ethereum's a different conduit, but you'd be pretty ignorant to say, well, there's only going to be Bitcoin. There's no, and I don't believe that'll be. I think you're going to see, we could be sitting in 5 to 10 years' time where there'll be 5 to 6 different digital currencies at that level. Limited number of supply. They'll use the same formula for a limitation of production, like they've done with Bitcoin. Well, what's the solution if you're selling the public a Bitcoin strategy? Hang on to that as the great white hope. I think that's short-sighted too. I think that the younger generation have seen so much wealth, they've seen so much productivity and evolution, and I'm talking about middle class, I'm talking about the lower end people, the more unfortunate people. And I think that their attitude is that they've become far too complacent. And I think the younger people today, they're a lot weaker than what they were 20 years ago, 30 years ago, 40 years ago, you know. And I don't know whether the work ethic's there as well. I don't believe the work ethic's there. So when I looked at that, he made some very good points, and it was very, very correct in his observation, but and the points that he made. But by the same token is that please don't tell me that we're going to pin our hopes on a digital currency, and that's going to patch up and turn us into you know, Wonderworld. It'd be good if you do both. A bit like training. People say, hey, get yourself in fit. Well, eat less, go light on the groceries and train like hell. That was pretty much our motto growing up when you want to get real fit. Go easy on the groceries and train like hell. Well, if you can work hard and also be focused and try to be focused on investment instruments, because that's what they are, Bitcoin's just an instrument, is that you'd have less to worry about at the end of the day if you did both.